Hi, this is Yuri Tiush and welcome to weekly report from FIBO Group. During this trading week, all eyes will be on the interest rate from UK, Australia and Eurozone. Also, traders will be interested in retail sales in Australia, the level of unemployment in New Zealand, the UK industrial production, the press conference of the ECB and the unemployment rate in Canada. This week may open with the moderate trading activity. Monday's Asian trading session most likely will show weaknesses because of holiday in Australia, so traders will wait for the release of the retail sales data. The Australian dollar has consolidated in a wide trading range since June of this year. Release of the index of retail sales in Australia could trigger movement to the price chart limits. Tuesday's trading day begins with the interest rate decision from Reserve Bank of Australia. Market participants' attention will focus on the Australian dollar to see if the Reserve Bank changes interest rates, which have been at 2.5% since last year. On Wednesday, traders will focus on the Asian session. In particular, the unemployment rate will be released in New Zealand, which has been declining since 2013. Analysts have repeatedly predicted a significant reduction in unemployment. Therefore, on the background of strong declining of Kiwi against US dollar in the last 3 years, we can expect a new portion of speculative interest from traders. The next significant news will be the release of the industrial production in UK. Recent data has not pleased market participants after the positive statistics in the first quarter of this year. Therefore, it is possible that forecasts on these statistics may be below the value. Just to remind that limit data for the UK industrial production is 0%. Thursday will be one of the most anticipated days as the discount rate of the Bank of England and European Central Bank will be released. On the background of this news, we expect some speculative activity. In addition, the pound against the dollar, after reaching a new high for the last 6 years, may take a break in anticipation of the interest rate decision. But the euro-dollar, which has been declining since May of this year, may continue his trend after an announcement of a rate of 0.15%. Also, trading activity will be supported by the press conference of the European Central Bank after the interest rate decision. And now we're going to listen to the opinion of the analyst from FIBO Group, Andrew Masters. Andrew?
Hello, Andrew. Please tell us a few words about the week of Australian dollar.
Hello, Dimmer, and hello, traders. The Australian dollar slipped below the 94 level this week as key economic news put pressure on the currency. The US durable goods and capital goods figures were released and came in above expectations at 0.7% against an expected number of 0.5%. Another important indicator was GDP, which grew at 4% in the 12 months to June, much better than the fall of 2.1% to the 12 months in March. These positive numbers means the US Federal Reserve can keep tapering its economic stimulus program and lifts the argument that the US economy is back on track. Also this week, the Fed chose to keep interest rates on hold at 0.25%, with analysts again questioning when they will raise rates in light of the positive economic numbers.
Oh, thank you. What is the consensus about when the US will lift rates and how will this impact the Australian dollar?
Well, Dimmer, until recently, analysts thought that they would raise rates in the second half of next year. But with continuing positive economic results coming out, we think it may be in the first half of next year. This will have a negative effect on the Australian dollar. Over to Australia, there was conflicting news coming out this week about the state of the housing market. At the start of the week, industry data showed that Australian new home sales rose 1.2% in June after a 4.3% decline in the previous month, which kept the dollar at around the 94 level. In the second half of the week, news coming in showed a fall in building approvals in July, which pushed the currency down as low as 93.20. The Australian Bureau of Statistics showed the number of buildings approved fell a seasonally adjusted 5% to 15,659 in the month. This number brings into question again about the potential development of a housing bubble, which has been talked about for some time.
Oh, thank you. One more question. Is there a potential housing bubble developing in Australia?
Well, Dimmer, Australian house prices are pretty high at the moment, but the demand is still there, including a lot of interest from China. As long as interest rates remain on hold, we don't think there will be a big correction in prices. Looking ahead, with good news coming out of the US this week, all eyes will be on today's release of two important indicators, which are the US non-farm employment figures and unemployment rate. Investors will be hoping for positive numbers as added confirmation that the US economy is moving forward. Next Tuesday, the Reserve Bank of Australia will announce their interest rate decision and are widely expected to keep rates on hold at 2.5%. More importantly will be the monetary statement due out next Friday by the RBA about the state of the economy and the reasons to keep rates on hold.
How soon do you think they will raise interest rates in Australia?
Well, Dimmer, consensus on the street is with inflation under control and a stable economy, there will be no need to raise interest rates. There may even be an argument to reduce rates if inflation remains low and the Australian dollar continues to appreciate.
Thank you, Andrew.
Thank you, Dimmer, and thank you, traders.
Thank you, Andrew. Toward the end of the week, the market will focus on data from the labor market in Canada, as unemployment has remained at 7.2% since last year. It should be noted that the Canadian dollar has been rising since March of this year. Disappointing data on the labor market can only strengthen speculative interest in the Canadian dollar. To summarize, the trading week will be influenced by the interest rate of the Bank of England and the ECB, and we can expect a lot of speculative activity against pound and the euro.